This guide is a comprehensive resource for beginners interested in investing in stocks. It covers the basics of stock investing and provides information on how to invest as well as what to invest in. Investing in stocks can be a difficult and intimidating process for beginners, but it doesn't have to be. There are many ways to invest, and we'll go over the most popular methods so you can find one that's right. Investing in stocks is a lucrative way to make money. Stocks are a great way to diversify your portfolio. Stocks are one of the most common forms of investment, but it can be difficult to know where to start. There are many different types of stocks, and you need to do your research before you invest in any one company. In this video, we will explore the reasons why investing in stocks is a good idea and some ways that you can get started with investing in them yourself. The investment game is not an easy one to play. There are so many factors that can impact your investment and make it a success or a failure. The more you know about these factors, the better your chances of picking the right investments. There are three main categories of investments: stocks, bonds, and cash. Each has its own pros and cons, and it's important to understand them before making any decisions. Types of investors and how to spot them. There are many types of investors. They all have their own set of expectations and requirements for the company they invest in. Here are some of the most common types. Angel investors. These investors typically invest in smaller companies with a potential for fast growth, but they may be more hesitant to invest in companies that require a lot of capital. Venture capitalists. These investors typically have large funds, which means they can afford to take on more risk than angel investors. They also tend to invest in later rounds or stages, which means they are looking for a larger return on their investment. Private equity investors. These investors typically focus on buying and selling companies and do not want any active involvement with the company's operations. The stock market is a representation of the economy. It is a place where you can invest in companies in order to make money. The stock market is not just for the rich and famous, but it is also for regular people who want to invest their hard-earned money wisely. The stock market has been on the rise recently, with companies like Apple and Amazon reaching new heights. If you are looking for a way to grow your wealth, then it might be time for you to start investing in stocks. There are many ways to invest in stocks and beat the market. One of the most popular methods is to invest in index funds. Index funds are a type of mutual fund that invests in stocks that are included in an index, such as the S&P 500. They do not try to beat the market by picking stocks with high potential for growth, but rather they simply try to match what is happening in the market. Index funds can be extremely helpful for investors who want a simple way to participate in the stock market without having to pick individual stocks or manage their investments on a daily basis. By investing through an index fund, you will have exposure to all or most of the companies that make up an index, and you will be able to track your progress against it with ease. The stock market is a great way to grow your money. It also provides an opportunity for people to create a passive income. Investing in stocks is one of the best ways to grow your money and create a passive income. A lot of people think that investing in stocks is too complicated, but it doesn't have to be. The stock market is a great way to grow your money and create a passive income, and it's not as complicated as most people think. Investing in stocks is one of the best ways to generate wealth over time. But it's also a complicated process that involves a lot of research, understanding, and patience. If you're new to investing in stocks, it can be difficult to know where to start. To help you get started, we've compiled some of the most essential information about stock investing so that you can make informed decisions about how and where to invest your money. Investing in a high-risk investment is a decision that can be dangerous. However, it can also be rewarding. High-risk investments are not for everyone. They require someone who is willing to take risks and be patient with their money. The pros of high-risk investments are that they offer the chance of quicker returns than low-risk investments. The cons of high-risk investments are the higher risk of losing money and the lack of liquidity. The stock market is a place where investors buy and sell stocks. It is also a place where stock prices are determined by the law of supply and demand. The prices of stocks are influenced by many factors, such as the company's financial situation, the company's future prospects, the economic outlook for the country, and other factors. A savvy investor will do their best to make sure that they have a good understanding of these factors before investing money in stocks. They will also try to diversify their investments so that their portfolio doesn't get too much exposure to any one area or risk factor.